Okay, hi everyone. I'm just going to give everyone a few more seconds to get online because we've got a few people, a few stragglers, and then we'll get straight into it. So we'll give you another 30 seconds. Okay, we might as well start. So, welcome everybody. We're here tonight to introduce you to the world of mortgage advice and how I run the advisors at the Mortgage Lab. So, my name is Rupert Goff, and I'm the CEO of Mortgage Lab. Some of you might already be in the industry, and some of you may be completely new. What I'd like everyone to come away with is an idea of how you can grow your own mortgage advice business, how much you get paid, and how the Mortgage Lab can help you with that. I'd encourage you to shop around and find out how other mortgage brokerages run their companies. It's good to know what's in the market. I'm very proud of the model that we've got, and I think it's one of the best and one of the fairest in the industry. It rewards hard work by giving you a valued asset and encourages participation between the Mortgage Lab advisors. This webinar is going to take about 30 to 40 minutes going through the information. After that, I'll get in touch with you and to see if you have any specific questions. The first thing to note is in about 2 hours, you're going to receive an email that tells you how to watch the recorded replay of this webinar. The link will be live for 10 days and you can share it amongst your friends if you think you know someone else who may be interested. After that, I'll send you one more email to see what your thoughts were and if you'd like to arrange a meeting to discuss any more. After that, I'll pretty much leave you alone. If at any point you want to get in touch, you're free to contact me. Okay, let's begin. So, what is a mortgage advisor? A mortgage advisor has an overview of all the banks, so that when our clients want to buy a property or review their mortgage, they can make an informed decision. These days, each bank has its own niche. Some cater strongly to self-employed business owners. Some really like to deal with mum and dad buyers. Some banks have funds to lend to buyers with small deposits, and this funding ability can change from day to day. The Mortgage Lab takes these clients to the best bank for them, and the bank pays us for it. Why is that? Well, because we're replacing a staff member that was sitting in their branch, taking up expensive ground floor premises space. So they pay us instead of their branch staff. And as the clients approach the time to purchase, we sit down with them and work out the best mortgage structure for them. It might save them money on their mortgage, or it might be structured to allow them to buy a business or have a baby in the future. This leads us on to our next question. Why would you become a mortgage advisor? It's in my honest opinion that being a mortgage advisor is the best business in the world. You literally turn up to people's homes, take a weight off their shoulders, save them buckets of money, and then a bank pays you for the privilege. So if you've been in business before, you'll know what a pain late payers are. Not just a pain, but a danger to your business. So the cash flow is the leading cause of business closure down in the first 3 years. But with mortgage advice, there are no late payers to chase like other businesses. None of these 90-day overdue invoices. The banks have cash and they pay on time. So mix in with that the fact that you are self-employed, which means if you work hard and bring in lots of business, you are rewarded by being paid more. The business itself is a low-cost business to run. The main expenses are coffee, parking, and a cell phone, and the cost to get onto the course, which is about $1,500. So, given that it's so easy to get into, who are we looking for? Well, you're going to be self-employed, so you have to be a self-starter. The more you work, the more you get paid, as I said. We have goals or KPIs which help you on your journey, but we don't call you to make sure you're out of bed. So you'll need enthusiasm as well, especially for the property market. Being a mortgage advisor means your finger is constantly on the pulse of the economy. You see the tide turning often before the statistics show it, and it's an exciting place to be if you enjoy the property market. If you love that market, that will rub off on your clients, and they will enjoy the process too. So remember, enthusiasm might just mean getting a kick out of helping people into their first home or watching them grow their investment property portfolio. It's different for different people, but you'll know whether you're excited to become part of the industry or whether you're ho-hum about the whole idea. One of the first filters we use when we're talking to new advisors is EQ. So you must be good at reading people, seeing when they're nervous, able to put people at ease. Getting a mortgage is stressful. These people are often signing up for 6, 7, 10 times their gross salary. So it's your job as a mortgage advisor to calm that person and walk them through the process. If you do that, you'll have a whole client book who think you're amazing and then tell all their friends you're amazing. Fourthly, you must be able to commit to doing this full time. It's a fun business with lots of benefits, but it is also very deadline driven. If a client comes to you and says that they are going to an auction tomorrow, you can't tell them that it's not possible to get the house signed off because it's not a day you work on mortgages. The deadlines are tight, and for your customers, the stress is high. So you've got to be on call. The first 3 months are also hard while you grow your business. The key is to get your name out there as a professional mortgage advisor. The more people you're in front of, the quicker your business will grow. So this means at least 40 hours per week of working on your business. I would suggest putting 60 hours per week in your mind, which sounds a lot until you realize that most of that will be having coffees and beers with people. So it's not that hard. This leads us on to our next requirement. You have to be good at networking. The more time you put into networking, the more business you'll get. End of story. You don't have to be sleazy about networking. It can be as simple as catching up for a beer with friends, going for a beer with a complementary business like an accountant or a real estate agent. Any time spent in front of someone else is a reminder to them that you are a go-to person and help them with them and their friends. And finally, and pretty obviously, you'll need to be able to drive, have full residency and a clean credit report. If you don't know if your credit report is clean, I'd suggest going to mycreditfile.co.nz. It's mycreditfile.co.nz. It's free to get your credit report. I think it takes they say about 2 weeks, but I think it actually takes about 4 days to get emailed to you, and it will give you entirely what the banks will see. So our business is to get the best arrangement for our clients. And so it's important to have the broadest range of options for them. We work with the broadest range of banks and non-bank lenders as possible. This includes the main bank suppliers who you'll recognize: ASB, ANZ, BNZ, and Westpac, who provide the standard mainstream mortgages. These providers typically give great rates and do the majority of the loans throughout the country. You'll notice there are 2 advertised banks missing. HSBC is very particular about who they take on as clients and don't currently have an advisor relationship. Kiwibank currently only works with a handful of advisors. If you have a client that's hell-bent on going to a New Zealand-owned bank, which does happen, we work with a range of other smaller banks such as TSB, SBS, and Cooperative. They're all high-quality, high-service banks that meet the needs of people looking for New Zealand-owned banks. They all pay commission, the same as the mainstream banks, and definitely have a place in a mortgage advisor's portfolio. And then we have some non-bank lenders, such as Resimac and Liberty. These lenders are typically for clients with slightly unusual application. They might be borrowing 80% on an investment property or have a bad credit report that means the bank isn't able to accept them. And finally, we have the finance companies that provide a higher rate of interest but have a slightly easier criteria to meet. One option that we are exploring at the Mortgage Lab is having a non-bank or sort of finance company lender specialist in-house. So if you feel that's you would be the advisor, the same as everyone else, but would specialize particularly in difficult applications. If this area is of particular interest to you or your networks lean towards the specialty, definitely mention it when you make contact. So now the question that everyone is wondering, how do mortgage advisors get paid? When a mortgage is drawn down, in other words, when a person settles on a house, An upfront commission is paid. This is a lump sum amount of money, and can range between 0.45% and 0.8% of the mortgage. So it's paid on how much the person borrows. So, for example, a $1 million mortgage would have a gross commission of between $4,500 and $8,000. A $500,000 mortgage would have half of that, so between $2,250 and $4,000 of gross commission. Now, obviously, that's quite a range. The question has to be asked: why would you send a mortgage to a bank that's going to only pay you 0.45%? Well, there are three reasons that I can think of. They might be what's best for the client. They might be the only bank that accepts the application, or typically that the banks that pay less upfront commission, so 0.45 or 0.6%, pay what is known as trail commission. So this is an ongoing payment that is continually paid while the mortgage is in place. So if the mortgage is in place for 30 years with that bank, you should receive a trail payment for that amount of time. It's based on how much they owe each month, so obviously it reduces over time, but the most important thing is it's essentially passive income. You're paid 0.2% of the mortgage amount to look after the client. Now, before we get too bogged down with this, let's look at some examples. For now, the takeaway is that there are two types of payments: the immediate upfront payment and the ongoing passive income trails. So let's look at an example here of a property that's been bought and the mortgage is $500,000. This would be a standard mortgage for most people in Wellington, Tauranga, Christchurch. Might be a little high for Hawke's Bay, but not by much, and is a pretty cheap house in Auckland. If the client ended up at ANZ, the total gross commission is $4,250 because ANZ pays 0.85%. So 4,250 at ANZ. If the mortgage ended up at ASB, the gross commission is 3,250 because they pay 0.65%. Now, it's worth remembering at this point that there are no extra costs to your clients. It's not like they have an extra $3,250 charged to them that they wouldn't have had to pay if they went into the branch. The money that the bank pays us is instead of what they would have had to pay for a branch member. The bank can have less permanent staff, less training costs, even less branches as a result of using advisors. So no extra costs to the customer, and they get to shop around all the banks that you have an agency with. Anyway, let's have a look at the next two major banks. So the same mortgage is paid at 0.45% with BNZ and Westpac, although Westpac has quarterly bonuses that can get you up to 0.6%. But this mortgage will also start receiving $83 per month after 12 months. So most importantly, this trail will continue as long as you continue to look after that client every time they have a refix due. It doesn't take many mortgages to start building up some serious passive income in the industry. And there is one extra treat that these two banks give you. Let's say your friend has a $500,000 mortgage already with Westpac or BNZ. They don't want the hassle of moving. They quite like their bank, but they do have an account coming up for maturity and they want to talk to you about refixing the mortgage. As long as that client has been with either BNZ or Westpac for at least 2 years, when you refix their mortgage, you will get the trail paid the next month. So the following month, you will start to receive your $83 per month. You haven't changed the banks. You have simply sat down with them for half an hour to an hour and helped them with their current mortgage. So you're getting paid for that. So those of you who love the idea of passive income should already be making a list of all your friends who have mortgages with BNZ or Westpac. If you don't know where their mortgages are, then we have a very good script which you can use to ask people without insulting or offending them. So now you know how much income to expect. The next most obvious question is, how do you find clients? We've already touched on networking, and there are a whole range of options available for a relentless networker. Most of the groups that you see there involve getting together weekly or fortnightly and usually limit attendance to one member per industry. So if you are in the group, there will be no other mortgage advisor in that group. It's a great way to establish trust with a group of people, and there are people from networking groups that I belonged to 5 years ago that I still keep in touch with. The next thing we have is, and I'll share this file with you if I can share a file. That should have worked. Is the Project 100. The goal of this document is to write down 100 people that you know who will support you in your business. They don't have to be about to buy or currently own. They might just be a good friend who will tell other people about what you're doing. The list of 100 people essentially amounts to who you will have coffee with in the first 3 months. You'll tell them all about the new business you've started and see if they know anyone who might need assistance. In your group of 100, there will be usually 5 or 6 people who will become super referrers or centers of influences, as I call them. They might work in a complementary business like accounting or real estate, or they might simply be those good friends who tell everyone they know and try their best to support your business. You want to make a note of them in your Project 100 and pay special attention to them. They'll help you grow your business significantly faster than pure marketing. Social media and newsletters are a great method for getting your name out there if done correctly. At the Mortgage Lab, we run these facilities for our advisors. We provide articles to push out on social media, design the newsletters, which are pushed out approximately every 2 months. And then we collect all the data about who has clicked on links and give that information to the advisors so they know who to chat to immediately. It's all a part of the next line, which is expert positioning. In other words, when people out there think of mortgages, who do they think of? Well, if they're in your network and they're getting subtle, not overwhelming reminders of what you do, they should think of you first. You're the one they think of when they think of mortgages. Next line is you can try cold calling. It's not for everyone, but it's an effective way of building your database fast if you have the script and the patience for it. It's used successfully in the real estate market, although their service is a little more transactional. But if you can do it, give it a go. It's a great way to build a database. So the Mortgage Lab runs webinars and seminars, webinars like this one, and seminars live in various centres around New Zealand to teach prospective clients how to purchase their first home or how to pay down their mortgage. We have a bit of a quiet period coming up to Christmas, but you can see our events page on our website if you want to join in any webinars in the future. And lastly, our joint venture scheme is unique to New Zealand and a company structure we've spent tens of thousands of dollars creating. So what we do is we search out complementary businesses like insurance brokerages or accountants and place one of our mortgage advisors specifically in their office. So they only work with that company. They don't work with anyone else. The benefit of this is that they don't work with any other competing company. The benefit of this is that you have a good group of professionals to send your clients to for their insurance needs, and they know exactly who to refer their mortgage clients to. It's meant to be a two-way street of trusted referrals. So if you know anything about commission-based sales, this joint venture scheme should be a huge plus for you. The hardest part about commissions is finding new leads, new opportunities. If you can show some value to these companies that you'll be working with, then they will provide you with an abundance of new clients to talk to. So what should you be expected to earn? It's always a difficult question. If you work hard and are good at asking the right questions, the answer is a lot. It depends on your network, how large your networks are, and how quickly you can grow them. Do you have a large family who will help you? Do you know any real estate agents or accountants who will support your new venture? We talk about KPIs or key performance indicators, and it's essentially the fancy word for new goals. So here we're looking at a $500,000 mortgage. using the middle ground of 0.6% commission. Remember, the range was 0.45 to 0.85%. Now, we take a 30% split for that commission, and I'll go into what that pays for later. So you'll receive 70% of $3,000, which is $2,100. And initially, we set the KPI or goal of sending 4 applications to the bank per month. And we'd expect 3 of these to be successful. Sometimes deals just don't go through, which means $6,300 per month, or over $75,600 in the hand for you. Now, this number is not meant to be exciting for you. It's not meant to be. We've seen a lot of other companies promise the world with unrealistic income expectations, but there is one thing you definitely should realize. Don't forget about the trail. So let's say you've written 3 successful mortgages per month of average of $500,000 each. That's a total of 18 million of mortgages. So let's assume you've put half of those mortgages to, so $9 million to trail paying banks, which are currently BNZ, Westpac, and Sovereign. That means the following year you have a total of $18,000 of passive income coming in, which you'll get 70% of. Every month, in other words, until that client leaves, there is roughly $1,000 coming into your bank to pay for any expenses you've got. So I really want to press home that the first year is not easy. The more work you do, the more you network and get your name out in the public, the faster you'll earn. But in general, the first 3 months are about telling everyone you know what you're up to. And then by the 4th month, you should be earning, which means you should expect $60,000 in the first year. Again, this is the bottom line. If you have a large network, or you have friends in the real estate who are real estate agents, or you get into a networking group, there's no reason why this shouldn't be $120,000 gross in your first year. And that number brings us to our incentive for our advisors that we're running at the moment. So based on pure commission, if you meet the $120,000 target between now and the end of December 2018, we'll pay for 1 ticket to our conference in Rotorua. And if you meet the $180,000 mark, we'll pay for you and your partner to come along. As well. It will be sometime in February or March 2019, and will be about 4 to 5 days. So there's no reason with good networks and solid work this isn't achievable for anyone starting, even in February 2018. This is about focusing on your goals and making sure you are positioned in the industry. Which brings us to our next slide, which is the second year. So this is where things start to get interesting. At this point, you know the industry, you know the systems, you know our systems inside out. You are known in the industry as a mortgage advisor. And if any of your friends or acquaintances ever hears the word mortgage, they think of you. So at this point, we raise your goal to 8 applications per month sent to the bank, and you should be expecting $150,000 of earnings before trail is paid. Your trail income at this point should continue to grow, and you should be seeing about $25,000 to $30,000 of passive income. So from here, the sky is pretty much the limit. Our systems allow you to write around 20 to 25 applications per month, which is about double the old paper method, and this is without needing any admin support. So to get through that first year, we also have a few additional sources of income that you can earn commission on. So we'll set you up and train you to work with clients on their KiwiSaver. Now, while the upfront commission isn't especially high on this, it does have a trail income component, which grows as your clients' KiwiSavers grow. This is a really good way to introduce yourself to clients. If you refer to one of our preferred life and health insurance brokerages, they will pay you 20% of the commission that they receive, and it depends on the amount of insurance that is taken, but it can generally be around about $1,000. Obviously, every person who is buying a house needs to protect their home with insurance. So referring to our trusted partners gets you a 4% commission, and because home and contents insurance is reviewed every year, they will get this commission payment early, so yearly rather. So you can view this as a trail payment almost. And finally, if your clients refer an easy to set up online trust to protect their own home, we have a referral arrangement with Trust Us. A successful referral to them would get you $650 gross commission. So now you know the most important aspects of the mortgage industry. I'd like to tell you about why we think Mortgage Lab is the best choice for you. Firstly, we have a fair commission split of 30-70. The idea is that we take 30% and take all the administration and compliance problems off your hands. This means you can spend 100% of the time going out, finding new clients. With the 30%, we pay for the following things. Now, it's a bit of a long list and it's a bit of a boring list, but we pay for professional indemnity cover, mortgage aggregation costs, FSP registration, financial services providers registration, your membership at dispute resolution, the CRM, which is the software that we keep all the database in, our additional service, one conference per year that's additional to the incentive conference, and health and safety compliance. Now, if you're not sure what some of those are, don't worry, that's exactly the point. You don't need to. We'll sort it all out. Your one job is to get out and meet more people who can help. So we cover all these costs for you. And we also implement all the compliance that is required in the financial services industry. So we make sure everything is up to date with the financial service providers database and dispute resolution scheme. We analyze market risks, including checking all our computer systems are protected as they can be. This includes business continuation strategies. So if anything happens to the network, we have several backup systems. It means you're up and running immediately. We also run health and safety, and we distribute all the commission. Now, I know it's not a very interesting list of things to look up, but again, that is the point. We'll take care of the boring compliance parts so you can get on with managing your clients. And then thirdly, we do the marketing for you. So we've already touched on this earlier. We work with you on your social media broadcasting onto LinkedIn, Facebook, Twitter, Google+, and Neighbourly. We'll write the logs that have specifically focused keywords and are enhanced for SEO. We interview guest speakers for the blogs. We'll then push those blogs out into well-designed newsletters. And of course, we'll run seminars and webinars as a way to gather new clients for you too. Fourth reason is when you're working with the Mortgage Lab, you're working with all of our advisors. We have weekly staff meetings to chat over hurdles that advisors have struck. They're not long meetings. The idea is to get you in, learn something, then get you out on the road again. But they're packed full of lessons that other advisors have learned that week. All advisors are encouraged to share and help one another. We also have a WhatsApp forum that advisors can post to with the latest information. If you hear that a bank has just changed the policy, you can broadcast it out to all the Mortgage Lab advisors. On more than one occasion, that has meant that an advisor has got a deal across the line that wasn't looking good initially. Obviously, you and I will have weekly one-to-one meetings to talk about your specific hurdles and make sure everything is running smoothly. This is the time to brainstorm ideas of where to grow your specific business and maybe ask questions that weren't covered in the staff meeting. Just on the side there, I don't do mortgages myself. My job is purely to mentor you guys. So I know a lot of other groups have their manager does mortgages or does the work that the staff do as well. It doesn't seem fair to me, so I stay out of it and basically pass any that I get on to you guys. Finally, we run a fully loaded intranet with all the latest information, forms, training videos, and even a live stream of interest rates from other advisors. So you always know what the banks are offering. And then lastly, we have that joint venture model, which is what we've spoken about. So this model means that we place one of our mortgage advisors into a complementary business. It might be a real estate agent or an insurance brokerage or possibly an accounting firm. We're trialing this in 2 insurance offices in Auckland, and it's going very, very well. Because you are the go-to mortgage advisor in the company, you receive a significant amount of leads or opportunities that would not have been passed on if you weren't there. So if you're still listening at this stage, the one last thing you need to know is what you need to start. Technically, you need a laptop, a cell phone, and a car. Now, I'll have a chat to you once we're talking about what kind of laptop is best for our systems. Cell phone can be Android or iPhone, and obviously the car just needs to be a good quality vehicle. You'll also need 6 months of savings and a bunch of enthusiasm. The reason we say 6 months of savings is because you can't be talking to clients and have a desperate look in your eye. You know the one that you may have seen in it in some salespeople, that look that says, please buy this or I don't eat this week. You should be recommending a mortgage for a client because it's the best for your client, not because you need a maximum commission. So even though you won't need it, we strongly suggest you have a stash of savings to live off. If you don't have savings, don't panic. It is possible to write mortgages before starting. Let's say your brother wants to buy a house next month, but you aren't quite ready to become a mortgage advisor yet. In this instance, I can meet your brother and process their mortgage, and I will then store your 70% for when you start with the Mortgage Lab. So you'll start with a buffer. As long as you start within 6 months of that mortgage being written, you'll get the commission when you begin. If you get 3 or 4 of these under your belt within the 6 months, you should have enough to start the business with a comfortable buffer. And finally, we're almost there. So what's next? So I would suggest completing the Project 100 and make sure you have a full list of people who you can contact. Get at least 300 connections on LinkedIn. The more you have in your network, the more will receive a notification when you make the move to the Mortgage Lab. Make sure you've got all those past workmates, those neighbors, old school friends, sports friends. You'll be surprised how many people you've worked with over the years. Get 300 connections on Facebook. You're not going to be spamming them on Facebook, but if you like articles about mortgages, it's a general reminder that you're in the industry. Now, if you like what you heard, contact me for a further discussion. We're looking for advisors all over the country, so don't let geography limit your options. We're particularly looking for advisors in Tauranga, Wellington, and Christchurch at the moment. And finally, thanks for tuning in. I love the mortgage industry, and I think you will too. So be in touch, and thanks for listening.